Hey guys, welcome back to the channel. Welcome back to another video. Today I want to talk a little bit about just basically what's going on ever since Chairman Powell has made the announcement about the three-quarter rate, the 0.75 rate hike, you know, and why I believe a little bit of we might have a 40% markdown in the market or a crash of 40%. Right? And this could be coming in the next 90 to 120 days. And this is just my opinion. I'm not no expert. I just want to talk a little bit about it and tell you guys why I feel the way I feel. Okay. First thing is, real quick about the market today. Everything was down. S&P was down 1.7 points, 2%. Dow was down 1.62%, and the Nasdaq was down 1.80%. Right? Now, looking at the market in itself, right? The NASDAQ by itself, in the article I've been reading, is teetering at its low like it was when COVID started. Now, if any of you guys were investors when COVID started back in, when it started few years back, everything sunk so fast in like the matter of like 2 to 3 days. Like I'd never seen anything like that. So, and then, we recovered from that and we made a lot of gains. It took a lot of months. In a couple months, we backtracked and got back a little bit where we were at, but it took a while for us to get back up. And then we had a slow descent with this situation with inflation and these rate hikes. It was a slow descent. And now all of a sudden, before you look up and notice and pay attention, we're close to numbers at COVID, when COVID was out. So I don't remember how many percentage that was, right? When the market had fell during COVID. But I know for us to be that close, that fast, after the recovery, it's no doubt in my mind that we can pass that threshold because it's just been people are still in a state of denial about a recession. Depending on who you talk to, a lot of people don't even believe nothing's going on. All they see is the price of gas going down and going up depending on where you live, and the price of food going higher. A lot of people don't even know what inflation is. So there's a lot of people out there that are naive or don't know about what's going on. But us as investors, we pay attention to this stuff. So the prediction I made of like it could be 40%, we can go down 40%, it's seeable. Think about it. They're having supply chain issues with automobiles, microchips, all that type of stuff. It's like we have real shortages and real problems in America that nobody really knows about. The housing market. People can't afford homes. Ain't nobody gonna pay all of that what they're charging right now for the interest rates on a house. Any of them. And then these banks are gonna make a lot of money off of this. It's I ain't gonna say there's no way out of it, but with that last rate increase, say for example, and this is why I say this could happen soon in the next 120 days. They just raised it 75 basis points, right? The rate hike. But if they have to raise it again, a half a basis point? What if they have to raise it again, and we still are not seeing the levels of the numbers going down? And the Fed already said, look, we're going to be aggressive. People are going to lose jobs. We got to get this fixed because they understand the severity of keeping the country stable. Now, taking into consideration all that I've said, right? What can you as an investor do? Like I said, it's all out of your hands. There's nothing nobody can do about it, but we can defend ourselves. I talked to a couple of clients today in which prompted me to think about this video. A couple of my clients, first client says to me, he says, well, what I'm going to do is I'm going to roll over a lot of my account in the U.S. securities. And he's saying base ETF. So basically what he's talking about is VTI. He must have rolled a lot of his money into VTI and S&P securities, right? Like I made in one of my other videos, which I'll leave in the description. You could go check it out about ETFs, putting your money in ETFs to get you some definite returns in times like this. Another client of mine, and this was real perplexing with me, she has a financial advisor who's her friend, her best friend. And he told her, "Oh well, what do you know?" She said, "Well, what is it? What do I have to do as far as the market's dropping? How's my portfolio?" He tells her, "Whoa, well, don't worry about it." He said, leave what you got and where you are, and then it'll turn and go back into it." He said, "Or if you feel comfortable, uh, we can take some of the money out and put it on the sideline." Meaning, instead of taking the money, they'll sell the shares of stock and then put the money back into, you know, how can I say this? Like it'll still be in. It's like having it in the bank, but not in the market. You'll still have the money there accounted, but it'll be cash on hand for all available trades. So I said, "Oh, okay." And when people have financial advisors, sometimes it's hard to talk to them when you think something's odd at it. But it raised my eyebrow. And I said to her, I said, "Okay, well, you're going to sit the money there on the sideline and you're going to miss a lot of good or important days in trading if this market flips. And you have an advisor. You tell this guy to do this stuff for you. What if he don't put the money back in time? You know, oh, I got full confidence in him." And then I was like, okay. So the next thing that she says, "Oh, well, I just store it on the sideline, the money on the sideline for dry, like dry powder." I said, "Money should be multiplied. It shouldn't just be sitting there. How you gonna know when the deals come? Are you even like somewhat active in what's going on with your situation?" And she was just so nonchalant about it. And I was like, man, you would just sit there and have that money sitting there. I mean, we're gonna have more opportunities for the market to drop. That's basically what I'm saying. I mean, anybody can say, "Hey, I'm buying these stocks this week. I'm buying these stocks." But when you buy the stock one time, if the market is still falling, you still want a dollar cost average and still buy the stock. And with her, I was saying to myself, I'm like, okay, now you're going to just sit here with money. And then I told her before, and like this is the part that was perplexing to me. She says to me, she says, "Oh well, um, I have two portfolios. One I'm up 300,000, and the other one I'm down 300,000. And the one I'm down with 300,000, I'm going to pull that money out." I said, "So you're going to pull the money out even if you're down $300,000? Oh, well, when the market shifts, I'll get that $300,000 back." That's bad advice. That's bad advice. I'm like, yo, I can't believe this guy told you he's allowing you to do that, and he's signing off on that. So it's kind of like one of them things. Like I'm like, man, she don't really know what's going on, and she's very well off. But I'm like, man, what kind of crap is that? This thing about to get real bad, and a lot of people don't know. So it's like one of those things where, guys, as an investor, speaking to you guys, if you're in the market, man, don't fall for no crazy advice like that. If somebody even goes along with that, something's wrong, and they don't have an alternate plan. The man don't have an ultimate plan. So I don't know. When me and her were talking, I mean, she came to me with the conversation, so I don't think she was playing around or just saying something to just try to sound important. I mean, she's well off, so I mean, she knows something about how to handle and manage money. But that was just perplexing me, and I was like really worried about it. Where I almost was about to call her back, like, "Hey, man, nah, I wouldn't mess with that dude." But I mean, it's not my place. But yeah, there are a lot of good stocks out here. So all I'm saying, guys, what I would do, or what I've done, or something that works for me, get you a watch list going. Whether you with Ameritrade, Robinhood, uh, M1 Finance, whoever, Webull, Charles Schwab, all of the normal plays. Get your watch list together. When you get that watch list, start putting your favorite stocks on there that you haven't invested in, but you always want to invest in. Put a strike price on them stocks. Watch those stocks and then strike. And once you strike, dollar cost average. Because I'm telling you, this thing is going to get a lot worse than it is before it gets better. They're predicting 2 years of this uncertainty in the market. So that's 2 years of, the ability to get your favorite stocks and to really build a strong, solid portfolio for yourself. So, what I'm doing, like I have 3 portfolios. One is all ETFs. I'll be dollar cost averaging into that. Uh, one of my portfolios I have a lot of growth stocks and stocks that I want to see that I've had for a couple of years see how they perform in times like these. And if they do well, I'll add them to my number one portfolio, which is the ones I plan on keeping for life. Those are my big boy stocks. All of my dividend stocks, my S&P stocks, my big stocks, you know, and that's my plan. You know, I have a lot of banks. I have a lot of bank investments only because of the uncertainty in times like this. They help cushion the load, and along with my ETFs. Um, am I the red like everybody else? Yeah, for the most part, but it's manageable because I understand and I had a strategy of in case this ever happened. Because we can be in a bear market, I mean a bull market, and stocks can be taken off, and people always be like, "Oh, the next crash is coming tomorrow. The next crash is coming tomorrow." So you always want to be prepared for something like that, but you still want to make it to where you benefit from the bull market, and that's what I'm doing. But guys, I just want to chime in a little bit. I didn't really have a lot to say, but I mean, it was just on my mind. I wanted to share that with you guys, like the advice that she was getting, and a lot of people are scared. You know, this is one of the things because she said something to me that was crazy. But she's like, "This is why I got a financial advisor, Steve. I don't really want to talk about this kind of stuff because a lot of people are not informed, and they're not informed or smart enough." Now, I don't even use the word smart. I shouldn't use the word smart. They don't have the time, or they don't want to invest the time in the understanding the simplicity of the market, so they hire somebody else and pay them to do it. You know, and never bat an eye of what's going on because 300 down 300,000, and then you sell those stocks you down and you lose that money. That's hard right there. That's a hard drop. And I mean, let's pray she don't do that. But yeah, as usual, guys, man, I appreciate it. If you would leave me a comment and let me know if you heard some crazy stories like that. And what are your plans? Do you have a watch list? If you do, what stocks are you looking to buy in the upcoming months? Do you think the market can drop 40% and we can still descend? You know what I mean? And when you guys think it's going to recover. But in the meantime of it recovering, what are you doing to lessen the cushion the blow? And what are you doing to get ready for this bull market? What's your strategy? I'd love to hear from you. As always, like, share, comment, and subscribe. And I'll see you guys in the next video. Take care.